I think the focus should be squarely on one of the largest blocks, if you will, Alex.
It's going to be a busy day for the deal makers today. I think they're earning their keep for the entire year, one would think, based on the numbers that you've already spoken about. But the hallmark of a good seller, a good merchant, is to be able to gauge the market and to sell you more than you probably need. And so, therefore, based on the information that we had this morning, where we thought that the Vodafone group was going to be selling about 9-point-something% stake, that is now nearly doubled. So it's good work by the merchant. Let's talk about the implications, though, right? Because this is something that is confirming what has been building for some time. Everybody knew that the stake would be sold. And initially, they had said that the entire stake practically would be sold. That is coming to pass. What does this mean, first of all, for Vodafone Group and Vodafone Idea? And I think a lot of shareholders, retail shareholders, would want to know about that.
So, if you look at the shareholding of Indus Towers, roughly 48% is held by Bharti and remaining is held by Vodafone. So 21% is held by Vodafone PLC, the Vodafone Group, what we call it. They're selling off 18% of that stake. Actually, they upsized it from 9 to 18 overnight because of the demand. That's what according to Bloomberg. But what it means is that there are two folds that happens. The entire stake held in Indus has a pledge against bank borrowings of Vodafone Idea, and it also has a liability with respect to any payments which are not paid by Vodafone Idea to Indus as part of the tower sharing dues. So these two are the major things which are the liabilities for Vodafone Group. And if you look at the tower sharing part of it, it's capped at roughly around 6,500 crores. And for the 1.7 billion euro loan that the Vodafone Idea has, the liability is roughly around 4,500 odd crores, which is there, which is capped at 4,500 crores. So
11,000 crores.
So 11,000 crores is the maximum cap. So this money would first bring in cash flows to Indus, because the payments which have not been paid by Vodafone Idea would be paid, and it also is likely to reduce the liability of Vodafone Group, and they may be paring down the stake, the guarantees they have given for the Vodafone Idea, because at the time of merger there were loans which have been there for Vodafone, and they had given a bank guarantee, and that's carried forward.
So out of 16,500 crore, already 11,000 crore has been marked aside.
It's a cap. Sure. Exact amount Vodafone should be able to tell, but if you look at the investment value of Indus Towers on the books of Vodafone Group, it's roughly around 9,800 crores, which is there, and they're selling it much above 16,500 crores, the current value at the discount what we spoke about. And so, it is going to be a cash flow to Vodafone Group as well, because I think in July their annual meeting is coming in, and before that they would have exited these assets. So they've made it very clear that the payment of these liabilities will be done through monetization of these assets, and that's what they have done. So at some point in time, they may also try to sell some of the stake in Vodafone Idea, but it's not clear at this point in time.
Because the question right now, Neeraj, is whether or not the proceeds of this will be used to infuse some funds into Vodafone Idea. And here Sajid is talking about exiting.
So I stand on the shoulders of Sajid and UBS to make the point that I want to make. So what this overall fundraise means for Vodafone Idea right now, of course, the obvious question, could the proceeds be infused in Vodafone? But the more important, which Sajid has partly answered, the question is whether it could be lower than anticipated, because almost everybody believed, will the whole capital go? Obviously, it won't, because so the UBS note says that Vodafone rights subscription to Idea back in 2019 was funded via debt, for which stake in Indus was pledged. Now, UBS view is that Vodafone Group would likely settle this $1.8 billion secured loan, right? So therefore, that is out, and therefore their view is that potentially, if this entire stake is done, and by the way, remember, this is happening at what, a 40% premium to the 12 rupee price that used to exist just 2-3 months ago, before GQG and some of the others put in the money, right? So in some sense, there's a premium here to the earlier believed numbers, but their assessment is that potentially up to $500 million could be infused into Vodafone Idea. So from a Vodafone Idea perspective, we not got to Indus, and I am just using the numbers of brokerages. Sajid has the more updated numbers, but purely from a perspective of what it means for Vodafone Idea, fund infusion into it, settling of some of the debt, and more importantly, the the prospects of more capital coming into Vodafone Idea, it being able to repay some of the dues to Indus, etc., is all a part of an ongoing story. To my mind, this one is not as big for Vodafone Idea as it might be for Indus.
Quick question, 500 million, is it based on the previous expectation of the stake sale, or is it the...
No, now the current expectation.
So the 500 million is the same for, the 4,500 crores, which is the liability capped against the bank loan, which bank borrowing, which is there. But look at from the point of view of Vodafone Group, they have a carrying value of nil on the balance sheet for the stake, and they don't want to increase that carrying value. Typically, they have what 29% or something, 23.2% in Vodafone Idea, and that values that brings in a loss, Vodafone Idea loss of roughly 4.52 billion on their books, which they haven't recognized. So the moment they put an equity, they will have to recognize that losses as well.
So there is a strong argument against that.
Right? So they're not going to recognize that 4.5 billion euro of losses of Vodafone Idea on their books, because their carrying value is there.
So Sajid, what does it mean for Vodafone's shareholders today? I think Alex started with that premise. Vodafone Idea shareholders. So Vodafone PLC, we don't figure.
Two things it brings in. It brings down the liability of Vodafone towards Indus Towers, and eventually,
Vodafone Idea.
Vodafone Idea to Indus Towers. That's one thing. And the second thing is that it frees up a little bit of headroom in terms of credit they can take from the banks and other stuff because of the liabilities and other stuff. So we've been talking about Vodafone Idea trying to raise up to 25,000 crores in debt, and they've been in talks with many other places, and it's not coming through. So this will open up some of the headrooms for Vodafone Idea.
Reduces.
For Indus, there's two things. One, it gets the money which Vodafone Idea owes, and the second, they will resume the dividend payment, because they've stopped the dividend payment because they were not getting money. So for the shareholders of Indus, especially Bharti Airtel, it will be a thing.
Does Bharti take ownership, as in majority ownership?
47.9% is the thing. The Indian promoters, which includes Indian companies which own Indus Towers, is roughly 51%. 3% is still owned by Vodafone PLC. So my assumption is that over a period of time, Bharti will buy out Vodafone PLC stake so that it can get 51% and consolidate into Bharti.
Did Bharti come out and said they didn't want to infuse more capital into this? Sorry, Alex, did you hear that?
No, not capital, but if you're getting, see, Indus price went up by 45% in the last 3 months, and over 73% in this year alone. In the last 12 months, is around 120% has gone up, right? So there is a capital appreciation which is there, but there's an opportunity for Bharti to consolidate as well.
I just have one point on Indus Tower, really, to my mind. And again, of course, this is something that one of the other brokerages has also put out, but that proceeds will, of course, used to pay off the Vodafone PLC lenders and so on and so forth, etc., and stuff like that. But if a large overhang of a large block on Indus, and this is a large one, right, goes out of the window for Indus Tower. We've seen brokerage notes talk about a target price northwards of 450 as well. The reason why the stock, after having this heady rally for the last few weeks, has been sluggish, Indus Tower has been sluggish the last few, is because of this belief of this block, or the knowledge of the block. Now that this is out of the way, right, and if the belief is that Vodafone might clear some of the dues, etc., so on and so forth, does this, post the block, bring about the much needed relief for an Indus Tower shareholder? Never mind the rally that has happened, because also remember that while Indus, and Sajid would have a better handle, but that's my last point, while Indus Tower has had a bit of a rally in the last 12 months, Indus Tower for the last 5 years has been a stock that's virtually gone nowhere. If you think of it, can this be the catalyst for the further uptick for Indus Tower?
Neeraj, tower businesses per se are like annuity businesses, right? But this company is not acting like one because of the liability of Vodafone Idea. So the liability, if it goes away, it starts generating cash and comes out as dividend.
Simple. There you go. So the way that I'm seeing it, even if there is no infusion into Vodafone Idea, it's still positive for them from the perspective of the dues getting cleared and the opportunity to raise debt. And it is certainly going to be a positive if any money comes in. It is definitely going to be positive for Indus Tower because dues are getting cleared again, and Bharti Airtel might just consolidate. So that's, I think, the sum and substance of this conversation. Let us know what you think, and are you going to go out and buy any of these stocks? Let us know in the comment section and what you think about the current prices.